Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, just a quick market update here. Basically we're just undergoing a large rotation, right? It wasn't clear whether or not when the semis started to break, whether or not money would leave. It's not. It's just rotating. It's moving around. You can see last week things were up. If you go look inside here, you can see the semis down, but you got like Biotechs surging, etc. So money's just moving. It doesn't want to leave this market. If you go back and look at last week, I talked about the relative strength and weakness of the stocks compared to the mags. And you can see here that you've got quite a bit of a distance still between these two, right? I expect this is going to narrow, right? We'll probably see this narrow to some extent. Does it get all the way back to where they get back together? No, probably not anytime soon, but there's a lot of froth still in the semiconductors, and how they unwind is really going to be the key to what this market does. In other words, right now you've kind of got the pullback. Let's say you go back up and you start back down, you break this, and maybe it escalates. If it escalates, then the market's going to feel the ripples. If it doesn't, then the market will just continue to do what it's doing. That is just rotate out of here and rotate into something else. Here is a picture of the stocks, right? You kind of got this key level down here and another swing point low below. And up until then, right, it was pretty much a straight run up. There's another swing point low down here. So I expect, this week, you'll probably get some sort of a test at some point on this low. Whether it breaks or not, I don't know. Maybe it does, maybe it doesn't. I don't know, right? We'll see when it gets there. You got a lot of volume there, so it's going to be hard to break this area down. I would expect that you come, especially if we come straight on down, I would expect you get a bounce off of there, right? And then you try to come back and break it. If you break it and you break it hard, right, then you can get some escalation, which may cause the ripples that I was just talking about. Last week I pointed out the IBB breaking out on all time frames. You got the extension this week in the IBB. I'm showing a monthly here, but if you look at it, you've got a huge ABCD structure in place. And so when you break out on all time frames, that's the one case in Neoclassical that you have to consider buying. All other cases, you should probably buy retraces, right? It just doesn't make sense to buy the breakouts, right? From a probabilistic standpoint, this is the one exception. Last week, I talked about the fact that Meta delivered a bombshell on Wednesday, right? It started talking about selling excess capacity. That's really what got the semis going to the downside. And it makes sense for these hyperscalers at some point to do this, because you can see they've got negative cash flow now in the case of both Meta and Oracle, and all the others are coming down. And so they're using up all their money, right? They're sending it over to the semis, they're sending it to the infrastructure builders, etc., right? That can't go on forever. In other words, they're not going to go negative and stay there. These guys have supported and ran this market higher, the hyperscalers, right? All the mega caps for years. This is a sea change. This is a huge difference. Now, will AI allow them to scale this back up? I don't know the answer to that. What I do know is that this can't go on forever. And right now, with this Meta shift, we're starting to see cracks in the AI trade as a result. There's always the fear mongering that's going on about, whether or not, the market's going to crash, etc., right? You need structure to crash. For example, if I look down at this particular chart, this swing point low was broken here, right? But this never broke, and this never broke. What if this came into this area and then broke?
that's where you could get major crashes, right? Because that's probably going to be a monthly swing point low as well, and you get multiple time frame breaks, then you have a problem. But folks, we're a long way away. I mean, this is going to be the buy. If this thing does come back out of this range that it's in right now. And so, to me, this whole nonsense about crash, it just doesn't hold water, at least not yet, right? You need a structure in order to break down and break down hard and to break down large. And we just don't have the structure. We don't have it here. We don't have it on the NDX. You know, you'd have to get down to this area down here on the NDX to make it. So, they're buys if they come back. And then you can evaluate what happens on the bounce. So you can read about all the sectors that are in favor and out of favor. I'm going to flip over here to the dollar. Now the dollar had broken out, and that breakout was across all these swing points. Actually, the two, this one and this one. And now it's coming back in to retest them. Now, if the dollar holds and flips back around and regenerates, which is what it should do, that's going to put pressure back on the commodities again. And you're going to see pressure on, the precious metals and elsewhere. And so this is a chart to watch. And of course, the other one is interest rates. You saw a big move down off that employment number. That took pressure off the rates because the rates have been up here around this 450 for a while now. This doesn't say that this is going to push back down. It's going to, turn. But it's definitely testing this retest regen. And then there's, a couple below. But again, these have been tested already. So this is kind of a key level. If this does escalate to the downside, right? Well, I shouldn't say escalate, but if it works its way down, you don't want fast moves in rates, and you don't want fast moves in currencies in general. But if this does work its way down, right, that's going to be market friendly, because that's going to mean you can refinance all this debt that's out there at a reasonable rate. If I look on the negative side, what's going to probably help to keep this market constrained, right, range bound? It's just that all of these need resets, right, on the MTTFs, and these are the major sectors and indexes. So, I think that's a big negative out there short term. Long term, everything's fine. Another issue is this: as this comes up to this line, right, this bullish trend, the trend breadth, that usually, if you go back and look at this, that usually is where the market gets dips, right? Now this one actually didn't. This one did, just a little bit delayed, but typically you get dips when that happens. And so, there's a concern as this comes up to this level that we're going to get some sort of a retrace off of it. We'll have to see how it develops. This is not 100%, but it is a warning sign that you're getting too much bullishness in terms of breadth. And as these prices go up and they reach those levels, it's hard for them to get more and more stocks to do the same thing, right? So I just look at this as a warning sign, not a timing indicator, but something saying, hey, you need to, be a little bit more careful as this comes up to that level. So bottom line here, we're just range bound, right? If the worst case breaks, right, it's going to be bought probably at those untested retest regens that I showed you about. I just identified, these issues, but overall, it just looks to me like it's more choppy trading as the big losers, which is the AI trade, starts rotating to the other sectors. Other than that, it still looks pretty bullish to me. That's it. Have a great one. I'll see you next time.